I'm the former AGM of India's largest bank, that is State Bank of India. And today's topic is on changing dynamics of NPAs. The ECL means expected credit loss provisions, and International Financial Reporting Standards 9, and how it is correlated. What is the impact on IBC? That also I will discuss. As you know pretty well, the cases are to be filed by either financial creditor or operational creditor or the class of creditors like debentures or bonds or fixed deposits who are lend money to the company, or in case of home buyers also, subject to certain conditions. All these people are filing the case to recover their dues or to resolve their particular whatever the funding is there to the corporate debtors. But if you see that total statistics, out of the total cases filed, 70% of the cases are filed by the financial creditors. If you see that out of the 70% of the financial creditor, and nearly that is another 65 to 70%. Only 1 minute, sir. Only 1 minute.
You are not audible, sir. You are on mute.
Sir, now it is audible, sir?
Yes, yes, yes.
Okay. So the ECL means expected credit loss provision. So I'm talking about that analysis data. And out of that total 70%, most of them are banks or NBFCs. But banks and NBFCs, earlier they used to calculate the provisions on non-performing assets under IROC norms, income recognition and asset classification. That was introduced in 1992 as per National Committee recommendations. That 1992 to 2008 years and 26 years, during this year, 34 years, the provisions on non-performing assets, the Reserve Bank of India is going to be changed with expected credit loss provision. That is International Financial Reporting Standard 9. Across the globe, almost all countries, they have implemented ECL. So once the ECL is implemented, how the side effects or how it impacts on the insolvency and the bankruptcy cases, that I wish to discuss with you up to 5 o'clock. As usual, 3:30 we will break for 10 minutes up to 5 o'clock. Whatever the best from my side, I will disseminate that information to you. The changing dynamics of the non-performing assets, expected credit loss, is nothing but International Financial Reporting Standard 9 and insolvency and how it is related or how it impacts or how it correlated with the IBC cases. All these things I will discuss. With effect from 1/4/2027, the Reserve Bank of India issued guidelines to the banks. Move from IROC norms, income recognition and asset classification provisions, and the classification of advances as per National Committee, that is to be discontinued 31/3/2027. 1/4/2027, they have to implement the provisions on non-performing assets under expected credit loss provision, that is IFRS 9. So thereby, some impact will be there on IBC cases also. But before that, before what is the impact and all these things I will discuss later on. First, I have to discuss about what is ECL, expected credit loss provision. Before that, what is meant by IROC norms. Before that, banks are also the health code system. How the health code system is moving to IROC norm, that is the income recognition asset classification, and how IROC norms are moving towards the ECL. Then I will go, what is the ECL effect on IBC cases? I will discuss in detail all these things. So if at all any the communication gap or knowledge gap is there, kindly ask me. I will stop at about 3:15. 15 minutes I will ask what are any clarifications are required. Then I will move further like that. Because it is a new concept. This new concept also, it is a correlated with the IBC cases. Correlation with IBC cases of ECL I will discuss later on. But what is meant by ECL? What is meant by IROC? What is meant by health code system? All these things, because you are going to handle the banking cases, mostly the financial creditor cases. If you see the NCLT cases filed by the financial creditor or operational creditor or class of creditor or home buyers, major stake is that is the financial creditor. Now coming to an NPA, everybody knows about this one. Actually, as a IP professional or resolution professional, we are handling the non-performing assets of the financial creditor. But to some extent, the operational creditors, to some extent, class of creditor. That is a very, very few cases. But mostly we are handling the CARP cases or liquidation or PPIRP or the personal guarantor to corporate debtor. All these things are related to banking non-performing assets only. An NPA is a loan where interest or principal is overdue for more than 90 days. This is with regard to term loans. But working capital loans are there. For that, out of order concept is there. So signaling the credit stress once 90 days from the due date, if the borrower is not paid, something is happening in the company. And raising provision requirement for banks. Once the account turn into non-performing after 90 days, bank will wait. Today, if the loan is a term loan deposit, the term loan due for big companies like 1 crore, the quarterly installment, the bank will wait for 90 days. After 90 days only, the bank will recognize that account is a non-performing. Then they will, earlier, they used to file with the debt recovery tribunal. Before that, in civil courts, because I joined in the bank in 1980. At that time, we used to file the cases with the civil courts or district courts or particularly the high courts. After that, SURFACE 2002 came into the picture. Banks can issue the notices 13.2 or 13 or whatever it is there. Then bank can seize the assets and sell in the market. After that, again the IBC came into the picture. Historically, high level of non-performing assets erode bank profitability. Once the loan is turned into bad, immediately bank has to stop the interest or calculation. That is the income recognition and asset classification. Income to be recognized as long as the account is a standard one. Once the account is turned into non-performing asset, we should not calculate, we should not recognize the interest. That is the principle of IRAC norms and constrained credit growth. Once non-performing assets are there, the credit growth will not happen in the bank. Why? Because once the loan is paid, then that amount can be utilized by the bank for other borrowers. Once this borrower is not paid, how the bank will recycling the fund? So profitability eroded. Banks, they will stop the income. That is a profit and loss account credit side. And they have to provide a provision debit side. One side, no credits. Income is not there. Another side, on the debit side, the profit and loss account provision to be made, then the profitability of the bank will come down. Overall, the NPA position of the scheduled commercial banks, if you see, out of the total advances, 2.2 to 2.3% of non-performing assets. Take, for example, my bank, State Bank of India. Almost, that is, if you see the total deposits, 60 lakhs crores into the credit deposit ratio is 60%. Nearly 36 lakhs crores advances are there. Out of that 36 lakhs crores, 2.3% calculation means that much NPAs are there. That much NPAs are there. So that's why the banks, they have to recover that amount because that funds are not belongs to the bank. That funds are belongs to the depositors. But what is a net NPA? Gross NPA is a total non-performing asset. But we are providing some provisions, whether it is recoverable or not, a question mark. That's why banks are from time to time, they are providing provisions. So the gross NPAs minus provisions is equal to net NPA. Today, the net NPA is 0.5%. So if you see the all banks put together, the scheduled commercial banks in India, 4,31,000 crores of non-performing assets are there. Once the individual, the partnership, the IBC introduce, even the professionals are also not sufficient to handle the cases. Today, we are handling only the corporates and the limited liability partnership companies only. Once the individuals, only individuals we are handling, only the personal guarantor to corporate data, but the individuals and the partnership not at introduced, but there is a provision in the code, etc. Over the past decade, India has seen dramatic reduction in NPAs, undoubtedly. This is on account of a SURFACE, on account of a DRT, on account of stringent norms, on account of IBC also. Today, the corporate debtors, some fear psychosis is there. Once the banks are moving towards that particular IBC, then my powers will be cancelled and the company will be run by the resolution profession, either IRP or RP, with the help of a committee of creditors and the overall, that is the adjudicating authority. So over the past decades, dramatic reduction in NPAs, the gross NPAs fall down from the double digit to the 2.2 to 2.3. If you see the 10 years back, 12%, 16%, double digit is there. And thanks to improved credit discipline, banks are more stringent norms. Still, some of the loans are turning to non-performing, tighter supervision, and multiple channels. Recovery through multiple. That is a one-time settlement, or compromise, or filing the cases with the debt recovery tribunal, or SURFACE 2002, 32 or 134, or that insolvency and bankruptcy code, whatever the CIRP, whatever the liquidation, whatever the PPIRP, or personal guarantor to corporate, all these things gives some comfort to the banks in recovering their loans. Reasons behind decline. Why the non-performing assets are declining? Enhance the risk management and tighter lending standards. Today, whenever the banks are giving loan, the credit appraisal or processing of the loan, all these things, tighter lending standards are there. Once tighter standards are there, lending standards, definitely the irregular borrowers or willful defaulters will be scrutinized and thoroughly, and they will reduce this one. Regulatory push, early detection of reporting of stressed assets. Today, the SMA0 or SMA1 or SMA2 special mentioned account. Special mention account is not a non-performing. It is a standard asset only. Once today the term loan is default, loan is due, up to 30 days, the loan is to be categorized as a special mentioned account 0. After that, special mentioned 1, 31 to 60. After that, 61 to 90. That is special mentioned account 2. Still the borrower is not paid. Then the loan turn into substandard. Substandard up to 1 year. After that, it will move to the doubtful asset 1 year or 2 to 3 years or above 3 years like that. After that, loss assets. So today, that type of the detection and reporting automatic alerts are coming. Once the borrower is not paying on the due date, then on the next day, the message will come to the branch manager. Sir, your account, one default is there. Now the account is shifting from standard to special mentioned account to 0 or 1 or 2 or substandard or doubtful like that. Greater resolution mechanisms through the IBC. Thanks to the IBC 2016 code, definitely it gives some comfort to the banks also. Today, the borrowers are reluctant to sign on the deed of guarantee. Particularly company directors, they are reluctant. Why? Because they have seen the picture in the market that if the company amount is not recovered, the banks are going to recover the amount through deed of guarantee given by the directors. That is called individual insolvency resolution process or personal guarantor to corporate data. So that's why today, on account of that fear psychosis of the directors, this is also happening. Thanks to IBC 2016. Written off recovery of action. Suppose sometimes, if at all no assets are there, borrower not dead, died, or it is very difficult to recover. So the banks not initiate a SURFACE 2000 or filing of DRT or etc. Straight away they will write off that one. Because of before writing off the particular loan, they will see whether the total provisions are adequate to write off that loan or not. Despite the improvement, challenges remain the periodic asset stress in certain segment. Today, the companies, mid corporates or corporates, or LLPs, limited liabilities partnerships, all are now to some extent on account of IBC, on account of SURFACE, on account of DRT, on account of one-time settlement, on account of compromise, or in case remote chances, the right of control is there. But still, unsecured retail loans are increasing, and the SME segment also increasing. And in the unsecured retail and MSME, partnership accounts are there individuals. Once the IBBI introduced the regulations for individuals and partnerships, definitely the present, whatever the professions are there, it is inadequate. And actually, they are thought of it to introduce the same during that 2021, but during pandemic COVID-19, that was deferred. Still, it is deferred. Why? Because once the economy is stabilized, then this type of initiatives are to be implemented. Otherwise, further problem will be there to the economy. And these sectors still we are doing handling through SURFACE or DRT, etc. But that is not up to the mark. And the potential for slippages, macro conditions deteriorate. But what is the side effects in the banking sector? Okay, non-performing assets are there. What is the side effect? No interest income. After 90 days, the computer system of the bank, it will not calculate any interest. But the system will calculate and kept in one account that is called accrued interest. Normal, the standard assets, it will debit to the customer account and credit to the interest account. The revenue of the bank will increase. But once the account turn into non-performing, it won't calculate. That is the purpose of the income recognition and asset classification that was introduced in 1992 under the committee recommendation. That is the then Narasimhan committee recommendations. Now that IROC norms are going to be changed with effect from 1/4/2027, that is called expected credit loss provision. That is worldwide. It is called International Financial Reporting Standard 9. And once the account is turned into non-performing, from the date of classification, no interest. But the system will provide provision because that is a substandard. Substandard, some provisions are there. That also I will discuss. After that, I will move to the expected credit loss. After that, I will move how the ECL impact on IBC cases. Provisions are to be made. Okay, interest is not to be calculated. Okay, I leave it. No, I have to provide provision. Once I provide the provision, my debit side, that is expenditure side, will increase and profit will come down. Effect on bottom line of the bank. The bottom line of the bank is nothing but the profit and loss account. The bottom line of the bank is nothing but the profit and loss account. Not only that one, even banks, they have to provide additional capital. If the risk assets, the non-performing assets are called risk assets. If it is increasing, the capital to be increased. The capital is today on risk assets 11.5%. That is a basic 9%. 2.5 is the buffer. Total 11%. 11.5. So once the bank is bleeding with a non-performing asset, how to mobilize the capital? If the bank is going for IPO or a subsequent public offer, who will contribute? So that's why ultimately the additional capital is called the capital on risk assets. What are the assets of the bank? Loans, investment. Banks are doing two types of activity. One is lending activity, second one is investment activity. The buildings, computers, all are peanuts. The core assets of the bank is only two. One is loans and advances, second one is investment. If a State Bank of India 60 lakhs crores deposits are there, it is a liability. And out of 60 lakhs, 60% bank is giving loans, 36 lakhs crores. 24 lakhs, they are investing in investments. Government investments, money market instrument, certificate of deposits, commercial papers, equity shares, preference shares, debentures, bonds, all these things. So 60-40, 60 is the loans, 40 banks are doing two types of business. Okay. Now the additional capital to be provided. Once the non-performing assets are increased, risk assets of the bank is increasing, additional on risk assets 11.5 provision is the capital is required. Next, rating of the bank. The bank's rating will also decrease. The rating of the banks is nothing but Camel's rating. The Camel says C means capital, A means asset quality, M means management, E for earnings, L for liquidity, and S for systems and procedure. So once the capital adequacy, C means the capital adequacy ratio. Earlier, some of the banks below 11.5, some banks 9.5, 10.5 like that. Once the capital adequacy decreases percentage, the rating of the bank will also decrease. Once if the bank's capital adequacy is 13%, good capital adequacy ratio on risk assets, because the benchmark is 11.5. Above 11.5 is a good, below 11 point is a bad. Not only that one, the second one is asset quality. The asset quality of the bank, if all loans are standard, the assets of the bank, the loans or investments are, even we are talking about non-performing assets in loans. At the same time, non-performing investments are also there in investments. NPAs. NPAs. Okay. Now, even NPAs also. So here, one more, this one. Banks are initiating the particularly, once the loan is turned into bad, they can initiate the CIRP under Section 7. At the same time, whatever the bonds or debentures, they have purchased, and if the companies are not paid, they can also initiate the CIRP. So in certain cases, the claims are made by the banks. Whenever the companies are the CIRP is going on, whatever the investments made, like in the CIRP also, the financial creditor or operational creditor or class of creditor. The class of creditor also financial institution. Okay. So asset quality. The asset quality. As per international benchmark, out of the total assets, the gross NPAs should not be more than 3%. That is international benchmark. Today, banks are good that 2.5, 2.2 or 2.3 is there. It is below 3. That is a good one. Next, management of the bank. How they are handling the span of control, the delegation of powers. All these things are comes under management. For that also rating is there. Next one is E. E means earnings. Earnings of the bank. Banks are called commercial banks. CB. CB means commercial banks, not charitable banks. CB means not charitable banks. At the end of the financial year, 31 March every year, they should get some profit. L means liquidity. On account of non-performing asset, the liquidity problem will arise. Once the loans are repaid, then automatically the banks are able to pay to the depositors, or the banks are able to particularly utilize the funds for a re-lending purpose. So that's why on account of a huge non-performing assets, the liquidity problems are also there. Yes, systems and procedures. Whatever the bank systems and all these are the parameters for give the bank rating. So once the NPAs are increasing, the asset quality of the bank is decreasing, the rating will decrease. Capital adequacy problem will be there. Liquidity problem will be there. Earnings problem will be there. Even the risk of the bank. If you see the Punjab Maharashtra Cooperative Bank, PMC, Punjab Maharashtra Cooperative Bank, that is located in Maharashtra, it is failed on account of huge non-performing. Once upon a time, Yes Bank, YESS Bank also, the mounting non-performing asset. And State Bank came into the rescue of the Yes Bank. So once the image of the bank on account of NPAs are increasing, the image of the bank will increase, the image of the bank will decrease, then people will start withdraw of their deposits because this is not a safest bank. Non-performing assets are more. Withdrawal of the deposit by the public, thereby liquidity problem. Once the image lost, people will withdraw. Asset and liabilities mission. What are the assets of the bank? Loans and advances, investments. But whatever the stationery or cash, all these are very, very low. Leave it of that one, the major these two. What are the liabilities? Deposits. Once the assets are repaid or investments are realized on due date, then they are able to pay the depositors. Otherwise, ALM mismatch will happen. Recycling of funds. Once the non-performing assets are increasing, then the bank is not recovering. Once it is recovered, they can use the funds for other purpose. Once it is not recovering, how they will use? The recycling of lower subscription of IPO or FPO follow-on public offer. Once non-performing assets are increasing, then the initial public offer for capital or follow-on public offer, another capital, subsequent capital, nobody will subscribe. Minimum 90% subscription is also required. So now these are the consequences. IBC also, to some extent, it came into the rescue of the banks today. Today, the big corporates, they are afraid of the IBC. Once the case is initiated, then the earlier management not to handle the company to be handled by IRP or RP, that is identified by the financial creditor or operational creditor or the particularly the approved by the NCLT, etc. IBC as a game changer. The IBC fundamentally altered how distress assets are to be resolved in India. Today, on account of IBC, earlier surface is there, not that much effective. DRT is not there, not that much effective. Some cases are filed in various courts, not that much effective. But IBC is an effective. Even today, the board of directors of the company, whenever they are applying for loan to the bank, they are reluctant to sign a deed of guarantee. Okay, once the company is a default, they will recover the amount from the company. Remaining balance, they will recover. They will go for personal guarantor to corporate. That fair psychosis is required also. Otherwise, banks are called backbone to the economy. It provides term legal process earlier. Lot of time. Once the case is filed, 10 years, 15 years, 20 years. By that time, borrowers are died or some bankers who has given the loan, that is a merger. All these things are happening. In the meantime, assets are disappeared also. Today, whatever the 180 or extension of 90 or another extension of 60, it gives a lot of comfort to the banking sector. That is financial sector. Not only banks, NBFCs also. Not only NBFCs, even operational creditor also. Not only operational creditor, class of creditors also. Not only the class of creditor, home buyers also. To some extent, some leverage is there. Now, the World Bank earlier told the capital and credit to be safeguarded in any country. Capital means the capital of the companies. Credit means the loans and advances of the bank. If these are safeguarded, country will flourish. Otherwise, the country economic problems will arise. Suppose if all companies are, particularly the capital is eroded and they are unable to distribute something, they are unable to provide the dividends to the shareholders, then in future nobody will invest in the capital of the company. At the same time, credit also. If the credit of the loans are not recoverable and depositors are reluctant to deposit their surplus fund in the bank, that's why to safeguard the capital, Securities Exchange Board of India is there to regulate the capital of the corporates and small investors. And to safeguard the credit of the banks, the one more regulator in 2016 is none other than IBBI, Insolvency and Bankruptcy Board of India, to safeguard the credit of the otherwise in the future nobody will once the loans are given by the bank and turn into non-performing and they are unable to repay the amount to the depositor, in future depositors will keep their funds in their houses only. They don't deposit with the banks. So that's why the capital and credit is very, very important. If you see the ease of doing business, Singapore is the number one. And the India is 2014 140 and 2015 142. Today is 63 on account of IBC implementation, insolvency and bankruptcy code. So the ease of doing business, once any default is there, if at all recoverable immediately through various acts or code, then prospective investors, definitely they will invest. Otherwise, it is not possible. And not only that one, earlier, the cases, particularly filing of the cases before IBC, if at all I filed in a debt recovery tribunal, before that I used to file in courts 10 years, 15 years, 20 years, like that. If you take average 4 years, 3 months in India, long time to take the resolve the bankruptcy. And if you take the Japan 6 months, that's why the 180 days is nothing but the standard 180 days. So after that, lenders are getting little amount. Once I filed the case, after a haircut, the lenders are getting 100 rupees a loan means in India, we are used to get a 25.70. But whereas in Finland or in Japan, 92.90. Because that type of stringent, the systems are there, laws are there. Once it is a defaulted, immediately that is to be recovered. In India as well as Japan. Even Finland also 90.0. But in India, one side for 4.5 average years to resolve the case. Some cases 10, some 15, average is 4.5. But in Japan, 6 months. Okay, I'm waiting 4.5 the years, approximately 5 years. But whether I'm getting full amount, 100%, no. After the haircut, the banks, whatever the outstandings are there, if the bank outstandings are 100 crores, they use it to get a 25. In some cases, 90% haircut, 95%, 90 or 95% haircuts are also there. But whereas Japan and Finland, good systems are there. But okay, delay is there. I'm getting, I'm getting the particular, I'm getting little. But at the same time, a resolution process cost. Resolution process cost is nothing but a CIRP cost. But in the result earlier, debt recovery resolution process cost or civil courts. Because once the case is filed, it is not only the legal expenses, but also officers are on duty to attend for the courts. To get the separate branches are also established today. The legal cost is very easy to arrive from the bank side also. Even my bank, State Bank of India, stress resolution branches are there. And if all 22 branches across the country is there, whatever the salaries expenditure, if I add that is or SAM, the stress research, the resolution, SAM is stress research management branches 22, and SARB is also number of branches are there. If I add how much a resolution cost, if a resolution cost is increasing, there is no profit to the bank also. Once I am charging the 9% or 10% rate of interest, and the cost of the funds are around 6%, 4 is the spread. If my resolution process cost is 5, I'm incurring 1 minus 1. The cost of resolution is also increased. Now, how IBC helps with non-performing customers? Before, IBC recovery mechanisms were slow and fragmented. Sometimes I am initiating surfacing. People are approaching debt recovery tribunal. Once I filed the case in DRT, then they will approach the High Court. So the jumping system is there. Today, on account of IBC, the jumping system is not there. Because IBC prevail over other acts. Before IBC, recovery mechanisms were slow and fragmented. Debt recovery tribunals, surfacing, Lok Adalat, up to 20 lakhs. With IBC, banks can initiate a CIRP for defaulting corporates. Resolution plans approved by the creditors for defined timelines. And the recovery rates of IBC have, in many cases, outperformed legacy mechanisms, contributing in the reduction of NPAs. NPAs. So the NPAs are also reduced. Today, IBC also contributed a lot in a recovery mechanism or resolution process. Because once I have given the prospective resolution applicants as a going concern, then the recovery amount, the PRA. So all these things are there. But at the same time, the positive trends. What are the outcome challenges? Resolution by IBC help to reduce gross and net NPAs in the systemic terms. Today, once IBC means people are afraid. Earlier, the Institute of Chartered Accountants also, India also, they have conducted one awareness program that is in local language to the Chamber of Commerce people. What is IBC? What is its implication? I have given lecture in one of the places in Andhra Pradesh, Rajamandri. They invited all the Chamber of Commerce people, nearly 100, 150 people are there. Then I disseminated the IBC in local language, Telugu. After the meeting is over, and nearly 9 people, they approached me, sir, I have supplied a raw material of 2 crores to one big Lalita rice mill is there. And they have not paid, sir. Even after 30 days also, they have given time 30 days. Now 4 months cross still. Is there a way out? Immediately told you can file an application with NCLT by paying at that time 2,000 rupees by giving the demand notice. Once the demand notice, you wait for 10 days. After that, you file an application. Immediately, they are happy. On the 9 persons also, immediately they got the checks. Because immediately the big company also, they will refer the information from the particular legal advices. On that day, the chairman of that ICI, he got a suitable remuneration on account of that initiative. So India saw improved ranks of international resolving insolvency indicators reflecting streamlined process. Whatever the best practices that are adopted today, the PPIRP is not picked up. In the coming days, definitely PPIRP. Once the ECL is implemented, PPIRP cases will increase. That I will discuss. Once, what is the ECL? Because I am talking about NPAs, I am talking about the IBC recovery and other things. What is IRAC norm? Before IRAC norm, what is the health code of provisions and provisions under IRAC norm? And what is the provisions to be made under ECL? Then how the IBC is interrelated with ECL? That is my conclusion. Now, operational hurdles. Resolution timelines often stretch beyond the timelines, even though we are talking about 180 days or extension 90 days or further extension of 60 days. Still, in some cases, delay is also happening. Delay is also happening. Some other cases, even after 9 months, also not admitted, even though 14 days concept is there. So, NCLT backlogs and litigations. Recovery rates vary such complexity and asset quality. Some of the assets, if no prospective PREs are not there, lot of a haircut, constraints in professional expertise. Even though it is evolving, still few professions not adequate the grip or command on the subject also. And the capacity at a tribunal remain concerned. Today, most of the NCLTs not equipped the manpower properly. They are also facing some problem. Most of the cases, most of the staff members are outsourced. So they have to get the things with the help of the existing manpower only. So these are the hurdles in the IBC. From now, we are slowly moving to the IRAC norms to the expected credit loss. Once expected credit loss is completed, then I will discuss about the interrelated relation between IBC and ECL. Traditionally, banks in India booked provisions only after loss had been occurred. That is called incurred loss mode. Today, the installment is due, not paid. I will wait first 1 month. That is special mentioned account 0. Next, the second month, special mentioned account 1. Still, I am applying interest, no provision. Why? Because after 61 to 90, still I am applying interest, no provision. Once 90 completed, then the account is not, the recovery is bleak. Then banks are identified that account as a non-performing, stop the interest calculation, reverse that interest, whatever the interest applied, and from there, they have to provide provisions. That model is called incurred loss provision. That's why that is income recognition. Income, when the income will be recognized, as long as the asset is in a good condition, that is standard condition, the interest on that particular asset, that is the interest on loans, I will calculate. I means bank will calculate. Once the loan is, the recovery is 90 days not paid, after 90 days, I will stop the interest and classify them as the non-performing. And even though I am stopping the interest calculation, I have to provide the provision. That is called IROC norms, income reduction, and asset classification. What is the asset classification? Standard asset, good assets. Substandard, from due date to 90 days not paid, then it goes to substandard. And substandard, it will park that account for 12 months, still not paid. From substandard to, it will go to the doubtful asset. That is 1, 2, 3 is there. And in certain cases, the assets are also loss assets. Loss asset means where the value of the property, collateral security deteriorated, then the banks are classified that asset as a loss asset. So that is called incurred loss provision. Under expected loss provision, aligned with the broadly IFRS 9, that is called Indian Accounting Standard 109. IFRS 9, International Financial Reporting Standard, or Indian Accounting Standard 109, both are one and the same. Expected. Today, if at all I am giving a loan, next 1 year, how much loss I am going to incur on that account? Day 1 only I will provide the provision. That is called stage 1. So in ECL, not on the account turn into non-performing asset. Once I have given the loan, based on the historical data of that particular segment, housing loan or car loan or education loan or MSME working capital loan or term loan, what is the history says out of the total? Immediately, today I am giving 10 crores. Immediately I will provide the provision notes. I need not wait up to the account to turn into non-perform. That is called expected. I am going to expect that much loss. That is the basic background of the IFRS 9. Today, after 90 days only, I will start the provision from 1/4/2027 onwards. For that, lot of the models are there. In that model, how it is useful to the IBC, that I will discuss once I have given a better picture about the ECL. Banks must recognize potential losses before assets actually deteriorate. Potential credit losses before assets actually deteriorate. No. After 1 month, after one year, if the account is going to turn into non-performing, at that time only I am providing provision. But in ECL, today only, once I have given loan, I have to provide the provision based on the historical data of that type of loans. That is called ECL. Non-performing asset, expected loss provision under IFRS and CIRP are the three key pillars of modern banking and financial risk. Today, the banking financial risk management, these three are important. Non-performing asset, ECL, and CIRP represent three key pillars of a modern banking and financial risk management. financial risk. Together, they reflect a shift from reactive to proactive. Earlier, once the account turned into non-performing, then only I use it to file in the CA, the NCLT. No, if at all I am visualizing this account is going to be the turn into bad means proactively I can file under IBC. Once 1/4/2027 onwards, the filing of the cases by the financial creditor is entirely different when compared to today's practice they are adopting. So together they reflect a shift from reactive to proactive risk recognition, improved transparency, more effective recovery of stress assets in India financial system. That's why I have chosen this topic, because of what is happening in the financial system. That also we should know as a resolution professionals. Earlier, once the account turned into non-performing, then only they use it to file with the NCLT. Today, on account of ECL, lot of parameters defined by the Reserve Bank of India that is going to be implemented with 1/4/2027. And for that also, Reserve Bank also told, in the meantime, you prepare the homework. The banks already started. Banks already changed their some system, IT system also from IROC to ECL. Now coming to evaluation of credit risk recognition in India. How it is evolved credit risk. Actually today IBC is nothing but the credit risk loans of the bank. Risk loans of the bank. They are filing other than the operational creditor, class of creditor, and the particularly home buyers. That is very little out of 100. The major one is the financial system only. Financial system, 70%. 70% of the loans. So whether it a financial system, either it may be the non-banking financial companies or the particularly banking, all people, they are financial creditors. How the credit risk? Earlier, to mitigate the credit risk, they are providing provision after the account turned into non-performing. Today, that is entirely different from 1/4/2027. For many years, Indian banks on the incurred loss approach to recognize a loan impairment. Loan impairment means a loan turned into bad. Non-performing asset is nothing but a loan impairment. Under this system, bank typically record losses only when there is a clear evidence the default or when asset becomes a non-perform. In the coming days, the definition of a non-performing asset also will be changed. Even in the coming days, definitely some changes will be made in the IBC code also. Once this system is changed, definitely this system is depending on this system. It is inevitable. Although this method is ensured a regular consistency, it also meant a financial strength in the loan accounts often remain unrecognized for the extended periods. This method is okay. But during this method, why the ECL method originated means it originated in 2007. That is called subprime lending crisis. That was happened in US. Almost all banks and financial institutions, they have given left and right, the loans. The most of the loans are turned into bad. Once the loan turn into bad, then only provision starts. But at that time, they devise the expected credit loss. So at the time of giving the loan only, you have to provide the provision. That is the basics of the expected credit loss provision. Delayed recognition of stress contributed accumulation of large non-performing assets. Once I have waiting time, why should I wait? Why at the time of giving the loan, even though I am doing the credit appraisal perfectly, all these things, some other loans turn into bad. Definitely. Based on the historical data, from the day one of the loan, if I provide the provision, if the loan is turning to bad, adequate provisions are available, bank financial risk management will not affect. Risk will be mitigated. So the delayed recognition of stress continued to the accumulation of large non-performing asset with the banking system, particularly during the previous decade when several corporate borrowers faced financial difficulties. These development highlighted the limitations and extending provision framework unscored and a need for more dynamic risk management. More dynamic risk management method is nothing but ECL. Actually, this is 3 years back only the Reserve Bank of India instructed banks to implement that one because across the globe it was implemented except in India. And World Bank or IMF, International Monetary Fund also, they have issued guidelines in this regard to implement at the earliest. But India, due to various reasons, it was not implemented. The time has come and they have issued the circular also, 1/4/2027. Once that is implemented, some changes will happen in the IBC also. In response to these challenges, regulator began exploring the international best practices in credit risk management of the financial institution. My systems, if at all outdated, my our economy is outdated, and across the globe, they are following the best practices. I have to adopt the expected credit loss model emerged as a preferred approach because it requires banks to estimate potential losses based on the future economic conditions. Today, the banks in Iran, almost all loans are turning to bad, whether it is a housing loan or car loan or business loan or big corporate loans, all are turning to bad because all are destroyed on account of war. How the depositors will get the funds in the Iran? Almost all people, they have deposited their surplus funds in the banks. They have given loan. They have invested. Is it recoverable? So by shifting this focus from historical loss recognition to forward-looking analysis, the ECL framework seeks to enhance financial resilience and transparency with the banking sector. On account of subprime lending crisis, this concept was introduced in 2007 before Rome. Still, even after that 19 years also in India, it was not implemented. Now, RBI has issued guidelines 7th October 2025. 7th October 2025. If you click that link in the 7th October 2025 link, then you will get what is the guidelines, how to implement the guidelines and all these things. This directive is already given and now the banks are eager to implement this one. Once this is implemented, earlier the classification of advances, the provision requirements are different. Today, after implementation, that is a different. Definitely, some effects are there on insolvency and bankruptcy code cases also, particularly the CIRP cases, corporate insolvency resolution process cases. First, let me discuss about the ECL, then how it impacts on IBC. All these things I will discuss. Sir, are you getting my point, what I am discussing, sir? Any comments from your side, sir? My voice is audible, sir?
Sir,
Tell me, sir.
Sir, one doubt is,
Tell me, sir.
instead of providing for doubtful debts or bad debts on 90th day, this method is proactive. You are telling on day one itself we have to make
Correct,
provision.
sir. Suppose
But
I have given a home
sir,
loan to
sir,
60
let me
lakhs.
complete, sir. Let
Okay,
me
sir.
complete, sir.
Ah.
Suppose if I know on day one this particular account will become bad or doubtful, my management will fire me. No, then they will ask why you are given to the loan to this
No,
particular account.
not like that. Not like that.
So logically, it is
No.
contrasting, sir.
No. Contrast. I will tell. I will tell because of that communication gap is there. Suppose I take for example, I'm giving loans to all the people, proper appraisal and all these things. Then only I will go to give the loan. But the historical data tells, even though I am doing all the active sub processes perfectly, still 2% loans are turned into bad means I have to provide a provision 2% on that particular loan. It doesn't mean I am not giving it to a bad borrower. I am giving to a good borrower, undoubtedly, because once he is processed through a credit appraisal, definitely he is a good borrower. Bad borrowers, I don't enter. Even in good borrowers also, some defaults are happening. That history tells us how much percentage. That is called probability of default, PD. That is called probability of default. So if I accumulate all these particular the provisions, then the financial risk management of the bank will improve. Are you getting my point, sir?
Yes, sir. Yes, sir. Got it, sir. Got it. Thank you.
So, sir, it doesn't mean I am not giving a bad borrower. I am always preferring good borrower only. In good borrowers also, certain conditions. Suppose in expected credit loss also, I have to take into so many factors. That's why today the banks are reluctant to implement that one. So, what is the history? Natural calamities. Suppose I have given a good, excellent borrower, 100% he will pay. But in that place where he constructed the house, calamities are there, natural calamities. And if losses are there, insurance coverage, or beyond that loss, I have to provide today only. If the natural calamity is not happened, then I am safe. Okay. Now coming to the incurred credit loss, NPS provision, expected credit loss, NPS provision. So at present, we are using the top one, incurred credit loss. Once after 90 days, once the account turn into non-performing, then only I will provide it. Today, that is not the case. Expected. Okay, I'm giving a good borrower. Still, doubt is there because on account of his salary. Suppose I have given IT people, that too in Infosys. Earlier, once all people are paying, some people, they 90 days not paid. Why I asked? No, sir, that they have retrenched. It is not in his hands. Even that type of forecasting is also not possible to the banks. But based on the history, how much retrenchment is happening and how much loans, that data is very, very, very important in this. Here, the data is male, female, sector wise. Next, so many parameters are there. Okay, now the expected NPA provision. History of NPA. How history of NPA provisions from incurred loss up to incurred loss, that is ECL, I will discuss. After that, immediately we will jump into the IBC. Jump into the IBC. How the NPAs, the history provisions on NPAs to ECL, how it traveled. Then once you got the idea about this one, then it is very easy to understand the IBC also. Now coming to earlier, sir, non-performing asset classification is not there. Before that, non-performing asset, one system is there that is called health code system of the borrowers. Loans, health code we will use it to give. Before health code, no system. No system. So out of the total allowance andas, okay, the bank and the auditor, they will sit, sir, you have given 1 lakh crores advances. So you provide provision 5,000. No. Banker will tell, no, sir, 5,000 is a high side, sir, 2,000. So via media, they will provide 3,000 without any scientific method. Thereby, the provisions of the bank, the losses are more than the provision. Then Reserve Bank, no. That unscientific method before 1980, this scientific don't encourage. Then Reserve Bank of India introduced at that time, 1980, health codes system for bank loans. What is a health code system? Today we are talking about standard, substandard, doubtful 1, 2, 3, or loss assets like that. Non-performing assets classification starts from substandard to loss. Before that, no NPA. 2002 before, no NPA. That is, all loans are classified into 8 categories. One is satisfactory loans. Second category, health code is irregular loans. Third health code is sick, viable, and undernursing loans. Fourth one is sick, non-viable, sticky loans. Code number 5 is advances recall. Code number 6, should file accounts. And code number 7, decreed debts. Code number 8, health code 8, bad and doubtful. And accordingly, provisions are made. This system is also failed. Provisions are less, losses are more. Once losses are matching with the provisions, that is a good system. Provisions are less, losses are more. Even income recognition asset classification also, provisions are less, losses of the loans are more. That's why ECL is giving good comfort to the bank. One is, okay, health code is also bad. Then 2002, Reserve Bank of India appointed one more committee. That is called IRAC norms. IRAC norms. Income recognition, asset classification. Income recognition, asset classification. Then health codes discontinue. Implement standard, substandard, doubtful 1 year, doubtful 2 year, doubtful more than 3 year, loss assets. Accordingly, provide. This is also not good. That's why banks, the Reserve Bank told up to 31/3/2027, you implement. After that, you discount this IRAC norms also. Go for ECL, expected credit loss framework for provisioning of banks. in the asset classification. Today, whenever I am filing a case with the IBC, I am always thinking about interest or installment of the principal remains overdue for a period of more than 90 days in respect of term loan. Once the term loans are there, today the installment is due. Suppose machinery loan taken by the corporate debtor. 1 crore this month due. I will wait up to 90 days. If still not paid, then I will file in the NCL. But this system, this particular formula is not applicable in case of working capital loans. Working capital loans are cash credit or overdrafts. Another method is that is called out of order. Once the outstandings are more than the limit of the bank for 90 days, then it is NPA. If during the month, particularly in 1 month, the debits are more than the credits, and after 90 days, the account will turn. And if the customer is not submitted stock statement for a period of 6 months, non-perform. Next, then the renewal of account. Every year, the working capital loans are to be renewed. Renewed means they have to submit the fresh balance sheet and all these things. After that only we will renew. For that, if renewal is not happening, then also not to be that also to be classified as a non-perform. That is called out of order concept. So all these things they are going to based on that they are providing provision. This provision is only 31/3/2027 only. 1/4/2027 the expected credit loss. Provision under IRAC to be discontinued after implementation of ECL on standard. Today, banks for safety side, even though loan is good, still banks are providing a total amount of loan. We are providing the 0.25 on agriculture loans, housing loans, MSME loans. Okay, this provision, if we set aside, even in unexpected any loss is there, this provision safeguard to us. That's a Reserve Bank told, this is a good idea, provide. Even standard assets also banks are providing provision. And even banks, commercial real estate sector, out of the total loan, 1%, even though the account is a good, still, no, we have to provide 1%. If the provisions are accumulated, then if suddenly any losses are there, these provisions are useful. And commercial real estate, 0.75, other loans, 0.4%. Straight away, all these things are on standard assets. So banks are safety side. Still, even though they are providing still safety side on standard asset also, provisions are less, losses are more. So that's why on substandard, today this is also to be discontinued after implementation ECL. What is substandard? From substandard only, banks are used to file the case with the NCL. Once the loan is defaulted, up to 90 days, immediately they will send a notice. If they are not responded, simply bank will file the case under section 7. But it is not happening in the banking system. They are requesting, please pay boss, otherwise we will go for NCLT, means borrower will also not listen. So on substandard means non-performing starts from substandard assets. A general provision of 15% secured portion. Once one loan is there, 100 crores, bank will split into two. This 100 crores loan, substandard, that is a non-perform. First, interest will be stopped. After that, I have to provide provision 100 crores. Out of 100 crores, how much secured, how much unsecured? 100 crores security, the collateral security 80 crores, 20 crores unsecured. On 80 crores, 15% provision they have to made. On 20 crores, 25% they will. 25%. So secured portion 80 crores into 15% provision to be made and 20 crores 25%. And however, infrastructure loans, they told unsecured portion you provide 20 only because infrastructure is important to the country and immediately the results will not happen. Even though it is a substandard, like other loans, you provide unsecured portion 25 other loans, but infrastructure loans you provide it because the size of the loan is big. Even infrastructure loans are also turned into non-performing. Banks are also filing under IBC section 7. But doubtful. Once the loan is continued in substandard for a period of 12 months, after that it will move to the doubtful. Some doubt is there. This is the present practice. Once it is the ECL implemented, this is also discussed. 100% to the extent of which advance is not covered realizable value. Here, particularly 100%, secured, unsecured. Suppose a doubtful one, up to 1 year, up to 3 years, more than 1 year, 3 years, and more than 3 years. 3 categories are there. DA1, DA the 2 to 3 years and above 3 years. 2 to 3 years and above 3 years. But here 100 crores loan is there. 80 crores particularly security, 20 crores unsecured. On 80 crores, 25%, 20 crores provision. On 20 crores, 100% provision. Unsecured 100% provision. For all these categories, the doubtful category, 1 year, secured portion 20 years, 1 to 3 years, secured portion 40, more than 3 years, 100%. And in regard to, this is with regard to doubtful. Suppose a loss assets are there. This is not recoverable. Bank has to file the case to recover. If amount is not recoverable, then bank will classify that account as a doubtful. This is doubtful also. Auditors, internal auditors, external auditors. This account not recoverable. Provide 100% on outstanding. And write of the loan. So on loss asset to be discontinued after implementation of ECL. Loss asset should be written off. If loss assets are permitted to remain in the books for any reason, 100% outstanding should be provided. This is the earlier approach. This is the present approach. This approach will continue up to 31st March 2027. And 1/4/2027, as per the Reserve Bank of India, the circular number, this one. Banks are to be implemented expected credit loss provision. But how it impacts, that I will tell. Sir, why all these things, how it is relevant to ECL is relevant to IBC, then I will discuss. First, we have to understand the health code, followed by IRAC, after that ECL, and ECL versus IBC. Loss assets also discuss. Now, we have discussed before health code, how the provisions are made unscientific. Health code, 8 codes are there, but the provisions are less, losses are more. After that, income recognition and asset classification, standard, substandard, doubtful 1 year, 1 to 3 years, up to 1 year, more than 1 year, up to 3 years, more than 3 years, loss assets. Accordingly, Reserve Bank of India given provisions, standard is some, substandard this one like that. Okay. Now, this is also going to be vanished only once for that also the preparatory work already done at the banks. Even though they are going to implement in the meantime preparatory work. During that preparatory work, number of cases of IBC will increase. Because a thorough examination of each and every account is required. Thorough examination of each and every account is required by 1/4/2027 implementation. Earlier, we have implemented the IRAC norms. No. This account, and definitely we have to recall that account. Recall the account means through the IBC only. During this process, why I have started now means during this process, some of the accounts are going to be filed by the financial creditors. But this system is already there, implemented in NBFCs already. Already NBFCs, non-banking financial companies already implemented. Now, the ECL approach. Sir, at this point, any doubts are there, sir? Again, any clarity is there or not? Sir, madam. Am I audible, sir? Hello, am I audible, sir?
Yes, yes, you are audible.
Okay, sir. Okay, sir. Okay, sir. Now I will discuss about the ECL approach. This is a new approach. This is implemented across the world and India also. The process is on and the implementation date is 1/4/2027. Once it is implemented, the earlier IRAC norms are discontinued. Then on account of this implementation, lot of changes will happen in IBC cases also. First, let me discuss about ECL. What is ECL? Expected credit loss approach is a credit impairment to integral part of IFRS. ECL is a part of IB and the IFRS, International Financial Reporting Standard, issued by IASB, International Accounting Standard Board, and US GAAP, United States, the generally accepted accounting principles, issued by FASB, Financial Accounting Standard Board. Now, almost all countries they have implemented, and India going to be implemented 1/4/2027. The guidelines pertaining to the impairment of the financial statement dealt with IFRS 9 financial instrument. This IFRS is not only for the bank loans, but also banks are also investing in investments like debentures, bonds in companies. Even today, the companies are under CIRP. If the bonds are not paid, the banks are also filing the claims to that companies. That is at the head office level, not at the branch level. Branch level, no investments. The Treasury Department is there. Once the loan, the investment turn into bad, then they will go for a claim in the IBC also. RBI proposal is based on the premise that incurred loss-based approach provision by the banks is inadequate. As I told earlier, unscientific, inadequate, health code system inadequate, incurred loss approach, that is IROC norms, inadequate. That's why the ECL regime in order to avoid the systemic issues. On account of non-implementation of the ECL in foreign banks, number of banks are collapsed. To avoid that one, that is called systemic losses or issues. Systemic issue means big banks or they collapse on account of huge non-performing assets. The Reserve Bank of India will adopt the ECL approach, use the IFRS 9 for prescribing guidelines for loss provisioning by banks. They will adopt ECL. The Reserve Bank will adopt ECL approach used in IFRS 9 for prescribing guidelines for loss provisioning by the loan loss provisioning. It is also proposed to implement ECL approach, loan loss provisioning, all scheduled commercial banks, excluding others. Reserve Bank of India given guidelines. This is implemented. This is useful. This is to be implemented in all commercial banks, except regional rural banks or cooperative banks like that. But cooperative banks are also not under the state cooperative banks are not under control of RBI. Urban cooperative banks are control. Some banks, cooperative banks are also controlled. Scheduled commercial banks, this is to be implemented with effect from 1/4. Whatever the existing system is there, 31(3). This is a circular. Okay. Banks can implement their own models for measuring ECL while estimating loss provisions with the proposed principles. Banks, they have given permission. You develop the model. So that's why what I told is, earlier system is going to be scrapped. Once the loan is impaired means non-performing asset, immediately the banks are moving to file under IBC. No waiting time. Earlier waiting time is there. Otherwise, they have to provide a full provision. To avoid that one, the case, once the loan is turned into non-performing, immediately it will move to the NCLT. Earlier, there is a lot of time is there. They will, because standard, substandard, doubtful 1 year, 1 to 3 years, above 3 years, that stages are there. Here, no stages. Stage 1, stage 2, stage 3. Once stage 1 crossed, immediate 12 months, if the loan is impaired, immediately they will file. Otherwise, they have to provide huge provision. That's why this is important for the IBC professionals also. Why the last year only the loan is given? Why it is filed in NCLT? Why they have not waited for 1 more or 2 years? That questions were lingering in the minds of the professions. With the proposed principles, under the proposed framework, banks will be required to classify the financial asset. Primary loans including irrevocable loans, commitments, investments held to maturity available for sale. Here, the IFRS 9 or ECL approach, not only for loans, but also bank investment. Banks are investing in government securities. Banks are investing in debentures, bonds, and fixed deposits, commercial papers, etc., etc. That is called investment. But government security, they don't file any cases. If debentures on due date it is not paid, interest is not paid, those cases also central office of the banks, they will file. That is called class of creditors. The class of creditors. In the companies also class of creditors. Who are the class of creditors? Bond holders, debenture holders, or now the financial, they are also financial creditors. Debenture holders, a floating charge on the company assets are there. So here, this ECL is applicable to two. One is a loan, second one is investment. In the investments also, three categories are there. Held for trading, available for sale, held to maturity. But held for trading not comes under the ECL purview. Available for sale, held. But ECL, to identify the provision, to calculate the provision under ECL, all investments, particularly held to maturity or available for sale or loans, are categorized under stage 1, stage 2, stage 3. Stage 1, stage 2, stage 3. Okay. But in normal, standard, substandard, doubtful 1 year, 1 to 3 years, and above 3 years, loss assets. But in ECL, to provide the provision, stage 1, stage 2, stage 3. That also called as bucket 1, bucket 2, bucket 3. Bucket 1, stage 1, bucket 2, stage 2, bucket 3, stage 3. What is a bucket 1? Today, if at all the bank has given any loan, next 12 months, what is the probability of default of that particular loan? And accordingly, they will provide the provision. It is not a zero. Suppose this type of loan, earlier history tells zero means zero. Otherwise, this type of loan, earlier history, even good accounts are also 2% losses there means on total amount 2% provision to be made. The credit loss result from the default events that are possible within the next 12 months. Immediately banks are they calculating interest. No problem. But a day one, you are giving loan on probability of default on the history of the particular segment of a particular loan product, you have to provide a provision. Again, after 12 months, you have to revisit to the account and arrive whether the loan risk is whatever the 2% provided provision is good or not. Suppose at that time the loss is more than 2%, the maturity period up to maturity, how much provision is required that is to be provided on the second year. Suppose 100 crores I have given loan to you. You are a perfect man and recovery is good on account of some reason. The day 100 crores I have given loan to you, 2%, that is 2 crores I have provided, that is a probability of default. After 1 year, I will go for and verify your account. Then at that time, you have the due of installment of more than 2 crores. More than 2 crores. Immediately, your loan period is 10 years, means up to 10 years. How much provision to be made in your account? That second year I have to provide. That is a lifetime ECL. Lifetime ECL. Here also, I have to provide a provision. At the same time, I can calculate the interest on the loan also. After that, what is the third bucket? Impairment. The business is stopped. Borrower diverted the funds. That is called impaired loans, credit impaired loans. Then in that impaired loans, effective amortization, whatever the outstanding are there minus ECL, remaining amount only we have to calculate the interest. So here in ECL, three buckets are there: bucket 1, bucket 2, bucket 3. This is called stage 1, stage 2, stage 3. Earlier, the stages in IRAC norms are standard, substandard, doubtful, loss assets. Doubtful also 1 year, 1 to 3 years, or the above 3 years are there. This is the stage 1. Again, I am explaining in detail. When a loan originated or purchased, ECL resulting default events that are possible within next 12 months are recognized 12 months ECL and loss allowance is established. So once I am giving the loan to any corporate or individuals, the day one I have to provide provision based on the historical data of that particular product or this one. On subsequent reporting dates after 12 months, also applies to existing loans with no significant increase. If I have provided 2%, after 1 month, 1 year, I visited, it is no loss below 2 only. I will make the 2 only. If more than 2% loss is there, then the life of the loan I will take and accordingly I will provide the provision. Interest revenue is calculated on a loan gross carrying amount, that is without deducting. So whatever the outstandings is there, on that outstandings only interest to be calculated. In determining whether the significant increase in the credit risk has occurred since initial recognition, 2% I have calculated, it become 2.5 crores. I have provided 2 crores, but loss is 2.5. Immediately, the loan life is 10 years, means up to 10 years I have to provide. That's why immediately these cases, without providing any provision, they will file under IBC. And stage 1 to 1, once 12 months, if the loan is not giving good result and any signals are there or early warning signals are there, immediately that is, if any, the risk default over the expected life of the loan. That is a change in the probability of default as opposed in the amount of ECL. So whatever the probability of default I have made, that is not adequate and a little bit amount is more, immediately I will go for life. Stage 3, if loan credit risk has increased significantly since initial recognition and not considered low, lifetime ECLs are to be recognized. Lifetime ECLs are to be recognized. The calculation of interest revenue, particularly on the loan outstanding only, banks are calculated the interest. This is stage 3. Once the loan is impaired, immediately the stage 1, stage 3 loans immediately they will file in the NCLT in the coming days. Stage 3, stage 1. Stage 3, stage 1 completed. If a second year and third year, second stage, third stage loans all are to be filed with NCLT. If the default is more than 1 crore. If the default is more than 1 crore. If the loan credit risk increases to the point where the considered credit impaired, the interest revenue is calculated that gross carrying amount minus the provision, whatever the provision is, deduct that provision and the remaining amount only we have to calculate the interest. So these are the 3 stages. Life ECLs are recognized in the stage 2. Lifetime ECLs are recognized as in stage 2. Here also impaired means life ECL to be depending upon the assessed credit losses on them, time of initial recognition as well as subsequent date of make a necessary provision by the banks. This is in brief about the 1-2. Banks are to be developed their own models and estimated provisions, etc., etc. And what is the objective? This financial reporting banks more information to the users and the financial statement. So this is the best practices that are adopted, and based on this only internationally, most of the loans are filed with under IBC code type in their country. They are following these practices only, and that is not far away. In the coming days, most of the loans are filed by the banks after following the ECL within brackets IFRS 9. This is the objective, impact carrying the amount, future cash flows, etc. And ECL approach result early recognition of the credit loss. Not only losses have already incurred, but also expected future losses also. That's why it is called forward looking mode. It is called forward looking mode. This method is prudent. Both financial assets and profit will be reduced to the bank. So once it is immediately filed, some good advantages are there to the particularly the banks. And once earlier, the the loans, particularly the bad loans, after a long time, they use it to file with the NCLT or DRT. Once it is implemented, immediately it will happen. The current historically they have to forecast current conditions, future expectations, all these things they will take into consideration, and accordingly the cases, bad loan cases are to be filed with the NCLT. Now, this is in brief about what I wish to tell, but now we are moving towards ECL versus IBC. Now it is interesting. Even though it is IBC, the ECL means it is a provision, correct? Earlier, some method is there. That method they are shifting to this method. On account of this method, how it is impact on the particularly the IBC cases. So this cases I will discuss in detail, and how it impacts on IBC in a detail, particularly in information memoranda, in PPIRP, in CIRP, or in liquidation, etc., etc. So how it is correlated with the ECL with the IFRS. This is actually deteriorated. Under a expected credit loss approach, aligned broadly IFRS 9, banks must recognize potential credit loss before actually deteriorate. This is they will calculate, banks are calculating probability of default for each and every account, loss given default, each and every account, exposure default, each and every account, and accordingly they will file the case with the NCLT. The stage 1, stage 2, stage 3 I discussed. And on account of this one, early loss recognition will happen to the banks. Earlier, it is very difficult. Today, in the coming days, provisioning volatility is there. Capital adequacy, transparency will be more. Lot of impacts are there in the banking system. And the timelines, the Reserve Bank of India introduced the timeline 1st April 2027. And they have given, once it is implemented, banks has to provide more provision. Okay, that provision to be appropriated in the coming years also. That is called glide path. Glide path. Now, ECL versus IBC. I will discuss in detail about ECL versus IBC. So it is interesting. Now it is interesting. After tea break, we will discuss about ECL versus IBC. So here it is a model is changed. On account of changing the model, some impact will be there on IBC. That is the purpose of this webinar. That is the purpose of this webinar. How the ECL impacts on IBC cases. That I will discuss in detail after tea break. Now we will break for tea for 10 minutes. Is it okay, sir? Now we will, sorry, sir. Okay, now we will break for tea, sir. Now I will continue how the ECL impact on IBC cases, particularly from the financial criteria point of view. The first one is the implementation of ECL framework by Indian banks with effect from 1st April 2027. In line with the forward-looking provision norms, is expected to be significantly influence the functioning of the CIRP cases under IBC 2016. Once it is implemented with effect of 1/4/2027, as per the RBI directives, definitely it will impact on IBC cases, particularly the CIRP cases also. The ECL framework is a transform the manner in which banks identify the credit deterioration, assesses the risks, initiate recovery proceeding, and participate in the insolvency resolution mechanisms. So once the stage one, that is 12 months ECL, the whatever the probability of default percentage is cross, immediately bank has to provide the total life of the loan as a provision. So immediately they will initiate the recovery or resolution processes immediately. So that's why the ECL is a early recognition, not waiting period is not more than 12 months. Not more than 12 months. Once the loan is good and the probability of default is within the 12 months, definitely it will be continued. A detailed explanation I wish to give, particularly the likely impact of the ECL implementation on CIRP cases filed by the banks. What are its implications on IBC cases? Early identification of the financial stress. So thereby, the number of cases will be moved from the financial system to the IBC. Under ECL framework, banks will shift from traditional incurred loss model to forward-looking assessment system. This means bank will estimate a potential credit loss based on the probability of default, macroeconomic indicators, borrower financial behavior, and a sectorial outlook. They will verify all these things and immediately they will file the case with NCLT. If the recovery is bleak and from the borrower, immediately they will file the case with the NCLT. Consequently, early signals of the financial distress in borrower account will be captured at the initial stages. Once the loan is given, earlier banks used to file after 3 or 4 years. They will continuously pursue the matter. And they are still expecting some recovery from the borrower. Once ECL is implemented, once the probability of a default is more than the projected, immediately at early signals, financial distress, the loans are to be filed with NCLT. Instead of waiting for an account to become non-performing under prudential norms, banks will advance indicated deterioration of the credit quality. Earlier, 90 days concept is there. And after that, substandard, after that, notices, all these things are there in IRACROMs. Now, that system, they want to, they will not use that particular system. Because once it is switched over to ECL, they will follow the ECL. The proactive detection mechanism enable banks to initiate corrective measures such as restructuring or enhanced monitoring or legal recovery provision at the early stage. These types, they will think it of whether to restructure the loan or enhanced monitoring or recovery. All these things they will discuss at the initial stages only. Once it is initial stages, definitely some good results will happen to the bank as well as to the economy also. and the number of cases to be increased. The NCLTs are to be equipped with the volume of the cases. Such early identification will strengthen the decision-making process regarding filing of insolvency application before NCLT. Early identification will strengthen the decision-making process, whether to file or not to file, whether to restructure or not to restructure, whether the monitoring to be increased or not. All these things are to be decided by the financial system at the early stage. At the early stage. The ECL system requires bank to maintain detailed and granular data. Availability of comprehensive loan data. Today, most of the companies, particularly under CIRP, they are telling that balance sheets are not available, that is not available, and the corporate data is not supported, and the missings are there, and claims verification is a difficult one, all these things. Once they started early process, the CIRP process, after that particular account turned into the bad under ECL approach, definitely the long term, the data of the previous years are very easy to get it from one way or other, one source or another source. The ECL system, particular banks to maintain detailed and granular data for every loan account, including borrowers' financial performance. Even banks are also, they will provide that data. You need not bank on or depending on the corporate data. Banks will provide the data because only 1 year back data, the quarterly statements are available with the bank, the stock statements are available with the bank, and whatever the GST returns, all these things, renewal data, all these things are available with the bank. So once the corporate data is not cooperating, there is no problem. This structured data environment ensures bank possesses complete information about the borrower's financial condition. You need not think about that information is not available, this information is not available, like that. Once the early detection of that particular loan is there, definitely some good results will happen. When the insolvency proceedings are initiated, this readily available data assists bank in prepare accurate document evidence to support their claims. So here, the once it is a early filing of the cases gives good results to the financial sector also. Why? Because the data is already available with the financial institution. Moreover, the resolution professional appointed under CIRP can utilize this data effectively for financial assessment or due diligence or preparation of information memorandum. Once about the company, for information memorandum preparation also, the granular data, that is every year the banks are to be prepared for the ECL purpose. That is also very useful to the resolution professionals for preparing the information memoranda, etc. At present, particularly reduction delay in filing of the insolvency. Earlier, once the loan turned into bad, they will take 1 year or 1.5 years. After that only they use it to file. Today, once the stage one, the probability of default, how much they have they assessed, what is the actual? If actual is more than the assessed one, immediately they will go for filing. At present, in many cases, banks delay in filing of insolvency application because they wait until the accounts formally classified as NPA and internal recovery efforts fail. Then only they use it to file. But in the ECL, that is not the case. With the implementation of ECL, banks have continuous credit monitoring systems that highlight the increasing credit risk well before the default escalates. Well before the default escalates. Because here, the predictions or forecasting data is very useful to submit the information to the NCLTs by the financial creditors. As a result, banks can take timely decision regarding restructuring or initiating of insolvency proceedings. That is required. Now, this will significantly reduce the time lag between the financial distress and the commencement of insolvency proceedings under the IBC framework. So once this ECL is implemented, the filing of the cases by the banks, the system will stabilize and the recovery prospects will be more. Possible revision of concept of default of NPA. So once the ECL is implemented, there is a scope for redefined the non-performing assets. What is a non-performing asset? The definition will also be redefined. The adoption of ECL model may influence the way banks interpret the financial stress and loan default. Traditionally, insolvency proceedings are triggered on account of occurrence of a payment default or NPA classification. In the coming days, the default or the particular the loan is not repaid by the borrower, it is entirely different. It is entirely different. However, forward-looking nature of ECL may encourage regulators and financial institutions to adopt dynamic indicators for financial stress, such as significant increase in credit risk and a deterioration of a borrower's cash flow and adverse macroeconomic developments. Today, some of the cases, there is no activity. And still, some of the cases are filed with the CAR under CARP. And the preamble says it is a particularly going concern concept. Sometimes it is not the possible also for going concern concept. But once this ECL approach is implemented, quick resolution, quick filing, and a quick action is possible in the under ECL. And such developments may need refinements in operational interpretation, default for initiating CARP proceeding. Once this is implemented, the revamping of the CARP cases and the smooth sailing is also possible to continue the company and to hand over the company to the prospective resolution applicants also. Prompt action on stressed borrower accounts. Because of ECL, require banks to continuously reassess borrowers' risk. Every quarter, they will reassess. If any signals, early warning signals are there, definitely they will do. And deterioration repayment capacity is immediately reflected in credit risk parameters. This enables banks to initiate prompt corrective actions, including enhanced monitoring of the stressed borrowers, engagement with the management, initiating recovery actions, filing of insolvency and IBC. So 100% there is a lot of change will happen in the IBC on account of implementation of ECL. The banks no longer rely solely on retrospective financial information. Instead, they will act as the predictive risk indicators. And maximization of distressed assets. One of the objectives of the IBC is maximization of distressed assets. Once it is a delay is happening, the value of the assets will deteriorate, particularly the plant and machinery. The buildings, land may appreciate, but if at all the plant and machinery or buildings are not in use, the value will be deteriorated. The plant and machinery become rusted and the buildings dilapidated condition like that. One of the principal objectives of the IBC is maximization of value of asset of the corporate. And once insolvency procedures are initiated at the earlier stage, of the financial distress, the corporate debtors, business operations, and asset value are more likely to be preserved. Once initial stages means the asset value will continue, not deteriorated. And the prospective resolution applicants are also eager to take that particular company. And early intervention prevents erosion of the enterprise value caused by the prolonged financial stress, asset deterioration, loss of market confidence, all these things, the earlier system that is there in ECL system, early intervention prevents erosion of the enterprise value caused by prolonged financial stress and asset deterioration, loss of market confidence, etc. Therefore, ECL-based early detection will increase the chances of successful resolution rather than liquidation. So most of the cases under the coming days, the IBC cases, most of them are settled at a CIRP level only, not at the liquidation level. Why? Because early detection of the sick of the company under ECL model, and accordingly banks are filed, and accordingly the cases are admitted, and accordingly the RPs are also handled, that one with a short span of time. Enhanced basic benefits for the stakeholders of CIRP. Once the value maximization is there, at the early stage, the new unit or age also very less, timely initiation of insolvency proceeding benefit multiple stakeholders in CIRP, including financial creditors will be benefited, operational creditors will be benefited, employees will be benefited, shareholders will be benefited, government authorities also, they will get. Otherwise, the accumulated amounts or disputed amounts, particularly GST or income tax, all these things, cumulative figure at one point of time, it is very difficult to recover that amount by the government officials also. So that's why once the ECL is implemented, banks will quicken the process of submitting the application with the NCLT. Early resolution preserves business viability, protect employment, and enhance the recovery rates of the creditors. Business viability. Once early detection and filed, definitely the business is viable. Otherwise, repairs, the renovation, all these things will not happen. And protects employment. Once the employment also, the people will continue, the same people will continue in the new entity also under the prospective resolution or successful resolution applicant, and enhances the recovery rates for creditors also. So the haircuts will reduce to a large extent once the ECL is implemented at the financial creditors level. In addition, investors, resolution applicants will find distressed companies more attractive when insolvency proceedings are initiated before the value assets deteriorate significantly. In addition, investors and resolution applicants will find a distressed company more attractive once the company is in a running condition without a lot of delay will not happen. Definitely, the resolution applicants, the investors are also happy to take that particular company. Greater scope for fast track. We are talking about fast track, 90 days and extension of 45 days. How many cases are filed so far? Almost nil, very few. And this fast track, the product of IBBI is possible to implement once ECL is implemented in the banking system. So the greater scope for fast track CIRP. So the fast track CIRP, that particularly the resolution process under IBC provide a shorter timeline for resolution specific categories of the corporate data. That is also possible. Because of ECL ensures the better data availability, early identification of stress, banks will be able to initiate the insolvency process at the earlier stage when the financial situation is still manageable. So that's why this fast track, once it is fast track is implemented, lot of benefits are there. So asset deterioration will not happen. Quality of the asset will continue, and the unemployment will not arise, and the resolution, the success, the prospective resolution applicants are also interested to take over the company and become the successful resolution applicants. In such a case, the complexity of the insolvency process may be lower, and thereby making fast-track CAFA mechanism more feasible and effective. The complexity. Why CARP is a complexity? Because once after delay, lot of time is there. In the meantime, erosion of the value of the asset, value maximization is not possible. Some of the key managerial person will resign, and all these problems will not arise once the banks are implemented the ECL and quick filing of the cases under IBC is possible. Increased adoption of a prepackaged insolvency. Prepackaged insolvency today, very few cases, not more than 8 or 7 like that. So in the coming days, definitely some good results will happen. The Insolvency and Bankruptcy Amendment Act 2021 introduced prepackaged insolvency for MSME. But even though it is a benefit to the MSME, very few people are filing the cases because here the financial creditor consent is required. Today, once the ECL is implemented, financial creditor consent is also easy to get it. Easy to get it. And the availability of the reliable financial data through ECL system will facilitate a pre-negotiated restructuring plans between the creditor and the debtor even before formal insolvency proceedings commence. And as a result, pre-pack insolvency resolutions may become more common because of the creditors can accurately assess the financial viability, design, and workable resolution. Once the banks are going to file the case, then the exploring the PPIRP is also possible once the ECL is implemented. Facilitation of a preparation of memorandum of information memorandum preparation is not a problem. Once the company turn into the signals, particularly wrong signals are there, the future of the company, immediately the banks will file, and once filed, the current information is available. The current information is useful for preparation of the information memorandum. During CARP, the resolution professional prepares information memorandum containing the financial and operational details of the corporate debtor. The extensive borrower level data generated under ECL framework will assist the resolution professional in preparing more comprehensive and reliable information memorandum. That is possible once the ECL is implemented. The financial creditors, they will provide the information because the accurate information is available with the creditor, the financial creditors. Accurate financial information improves the transparency and helps the potential resolution applicant conduct due diligence effectively. So once the ECL is implemented, banks are equipped with the knowledge of the particular sectors. Definitely it impacts on the preparation of information memoranda and the quality of information memoranda. This enhances overall efficiency of the insolvency resolution process. Reduction in liquidation cases. Most of the cases will be settled there. the liquidation only, the CIRP only. So the cases will not the cases will not major the cases will not shift from CIRP to liquidation. One of the major criticism of IBC framework has been high proportion of the cases ending with the liquidation rather than resolution. ECL driven early identification of the financial distress enables insolvency proceedings to commence before the business becomes completely unviable. When the company enters a CIRP at the early stage, there is a greater possibility of restructuring, attracting resolution applicants, and reviving the enterprise. So when the company enters the CIRP at the earlier stage, there is a greater possibility of restructuring. Thereby, the liquidation will not happen. Once there is no possibility of reviving the company, then only the liquidation come into the picture and reviving the enterprise. Consequently, proportion of cases resulting in liquidation is likely to decline over time. Additional advantages may emerge for CIRP in Indian commercial bank due to ECL framework. What are the additional advantages? First one is early warning signals for financial stress. So once ECL is implemented, early warning signals to the financial creditor. Once early warning signals are there, definitely they will take a decision to restructure or to file the case with NCLT. Under ECL framework, banks classify the assets into stage 1, stage 2, stage 3 based on the credit deterioration. This stage approached greatly early warning signals of the financial stress well before the account becomes NPA. As a result, lenders may initiate preemptive restructuring, resolution planning, or even IBC proceedings earlier, thereby preserving enterprise value. So here, once early warning signals are there, how early warning? Because the banks are developing models and tracking the particular loan account thoroughly based on the economic factors, etc., etc. Improve quality of evidence in IBC filings. In IBC filings also, lot of improvement will happen. The filings, accurate information, particularly through particularly the information utility also, correct information they will float by the financial creditor in the information utility also. ECL implementation requires continuous monitoring of borrower's financials, probability of default, and a loss given default. Therefore, when banks file applications under IBC, supporting documentation such as credit monitoring reports, stress indicators, default assessment will become more comprehensive and data-driven, strengthen the case before adjudicating authority. Better coordination among consortium and multiple lenders. In large corporate loans involving consortium lending or multiple banking arrangement, ECL-based credit monitoring, particularly in consortium advances also. Some of the cases filed under CIRP is consortium lending. So in consortium lending also, the ECL plays a very, very important role. So particularly this is happening in the consortium lending. We have to provide the information to the members of the consortium. In large corporate loans involving consortium lending or multiple banking arrangement, ECL-based credit monitoring requires regular data sharing and risk assessment among lenders. This helps lenders reach a consensus more quickly while initiating CIRP or approving the resolution plans. So here, once the data is shared to the members will take what action to be taken, whether to continue the account in the particular books of the banks or file the case with IBC. Because here the monthly, the quarterly information, accurate information is available under expected credit loss provision mechanism that is going to be introduced by the banks. And second one is particularly the large corporate loans involving consortium lending or multiple lending arrangements. ECL-based credit monitoring requires regular data sharing, risk assessment among lenders. This helps lenders to reach consensus more quickly while initiating CIRP or approving the resolution plans. So this is very much required. Better coordination. Once ECL is implemented, even big accounts under consortium is also to be filed with the NCLT at the earliest. Because the members, after getting the full information about the company, they will take a decision and accordingly voting will happen and they will file the case in NCLT. More accurate valuation of stressed asset. Valuation, particularly today, some of the people there, the corporate debtors, they are arguing, my assets value is this one, and a lot of haircut is there, and the properly values are not valued. Once you are identifying the stressed asset at the earlier stage, valuation is almost 10 or 20% difference that side or this side. And if at all the prolonged one, definitely some the wrong results will happen. But in this case, results will good. The ECL model involves forward-looking estimates, such as macroeconomic scenario and recovery rates. Such data can assist resolution professionals in estimating a fair and a liquidation value of the corporate data more realistically, improving the quality of a resolution plan submitted by the bidders. So here, the valuation is also very, very important. The valuation is also very important. Once ECL is implemented, there is no problem. And almost the present value mentioned in the balance sheet, almost it is recoverable through the CIRP process also. Better decision making by the committee of creditors. Once ECL is implemented by the financial creditor, decision making by the COCs. Since banks maintain granular credit risk data, members of the committee of creditors will be able to make a better informed decision making regarding approval of the resolution plans, restructuring of the proposals in case of the particularly the PPIRP, liquidation decisions, or haircut on outstanding loans. Thus, a COC commercial wisdom will be supported by strong analytical inputs. Reduction in litigation in insolvency proceedings. Clear documentation of credit deterioration and default indicators and ECL may be reduced. Disputes regarding the existence of default, quantum of claims, the timing of default. The litigations will also reduce once the ECL is implemented. The clear documentation of credit, time-barred documents will not arise. Because a quick resolution, the account is identified that account is to be filed with NCLT in a fastest manner by the financial creditor. Thereby, lot of benefits are there. The existence of default, clarity is there. Quantum of claims, clarity is there. And the timing of default, the clarity. Consequently, CIRP proceedings may experience reduced litigation before the adjudicating authority and the appellate tribunals. Reduce litigation. No, after a lot of time, no, sir, this is the rate of interest, that is the rate of interest, my documents are not time barred, and after that I have provided some information, he is not paid, he is paid, like that, so many litigations are there. Once the banks are implemented ECL, definitely some good results will happen. Good results will happen. ECL disclosures in financial statement improves the transparency regarding stress assets and expected recoveries. This will enable particularly the potential resolution applicants, investors to evaluate the distressed company more effectively and thereby enhancing the participation in the bidding process of the CIR. Once the early stage detection of the company is in distress or in trouble, definitely if the banks are filed, the prospective investors are ready to take that particular companies. Improved recovery forecasting and ECL models incorporate expected recovery scenarios and historical recovery data. This information can help the banks to forecast recovery outcomes and the CIRP more accurately, enabling to evaluate the viability of the resolution plan versus liquidation. Strengthen the pre-insolvency resolution mechanisms. Early detection of the credit deterioration under ECL may encourage banks to explore out-of-court restructuring mechanisms or pre-packaged resolution framework before accounts deteriorate severely. That is possible. This helps in reducing the burden of the insolvency ecosystems. Sometimes it will reduce the number of cases also. It depends upon the particular type of the particular loan account or sector, etc. Better alignment between the accounting and the insolvency process. Understanding of the incurred loss model provisioning occurred only after default. However, ECL framework recognizes anticipated loss earlier, aligning the account recognition of a credit risk with insolvency resolution mechanisms. This alignment improves the prudential regulation and insolvency outcomes simultaneously. So, once the loan turns into bad, immediately the insolvency outcomes simultaneous. That both are happened simultaneously once the banks are implemented the expected credit loss provisions. Strengthen the credit discipline among the borrowers. Once the ECL, if at all the banks are filing in a fast manner, definitely the borrowers, the corporate debtors, they will observe all these things. They will maintain the discipline proactively based on the particular banks, whatever their functions are there with regard to the bad loans, etc. Borrowers will be aware of the banks continuously assessing the credit risk through forward-looking models. This may promote a better financial discipline and timely debt servicing, thereby reducing severe distress situation that requires a liquidation of this one. Faster closure of CIRPs. Once the ECL is implemented, definitely faster closure of CIRPs will happen. Because of financial data and credit monitoring information already available under ECL framework, professionals can prepare information memoranda faster, which may shorten the overall CARP timeline. That is also there. But what is the future outlook? ECL, next phase of insolvency reforms in India. The ECL is the next phase of reforms in India. The future of insolvency. This is anyhow, ECL is going to be implemented with effect from 1st April 2027. Is expected a mark of significant transformation in management of credit risk and handling stress assets in the banking system. When viewed alongside the framework established under the insolvency, the ECL regime has a potential to push at the next phase of insolvency reforms. Once this is implemented, the ECL is implemented, insolvency reforms will also happen. Because once the financial the creditors models are changed accordingly, the IBC model will also be changed accordingly to fine tune or for correlation of these two the systems. One of the most important applications of ECL framework is shift from reactive to proactive. Earlier reactive, now proactive. Then the cases are also to be filed not on reactive, it is a proactive one. Under the early incurred loss model, banks typically reckoning the credit losses only after the borrower already default. In contrast, ECL approach requires banks to assess forward-looking credit risk and estimated potential losses throughout the life of the loan. This transformation will enable the lenders to identify the financials at much earlier stage initiation of the corporate other corrective actions. In this context, particularly the insolvency resolution, early identification of the financial distress can significantly improve the CARP process. Banks will process more reliable and granular data is also available. Consequently, insolvency filings are likely to be more timely, better documented, and strategically planned, thereby increasing the chances of a successful of a CARP rather than liquidation. So, once this system is changed, definitely IBC system will also to be changed. Otherwise, definitely it will be, the impact will be there. So once the bank, the recognition of the NPAs or the provisions of NPAs, the forward-looking approach is going to be implemented by the bank under ECL, definitely it will impact on the IBC system also. Another key development in expected credit loss regime is strengthen the information ecosystem. Once the proactive system is there, or definitely the accurate information is available surrounding insolvency proceeding. Detailed borrower level data generated ECL model enhance the quality of information memorandum by the resolution of professionals, enabling the prospective resolution to undertake more accurate financial due diligence, improved transparency, availability of the financial information, may attract a wider pool of investor strategic bidders, ultimately resulting in more competitive and value maximizing resolution plans. ECL framework also accelerates the growth of a pre-insolvency resolution such as pre-pack. Once the ECL is implemented, the pre-packed insolvency resolution, the particular number of cases will increase to restructuring arrangement. Early identification of credit deterioration encourages the borrower to engage the restructuring discussions before the company financial position deteriorates irreversibly. This proactive approach can reduce the number of cases, full-fledged CARP proceedings, elevate the burden of adjudicating authority also. So here, the lot of the implications are there. What I told is the ECL is a proactive approach. And accordingly, bank will take a decision to recall that particular account. once the banks are recalled that account, they have to initiate either SURFACE or DRT or IBC. Now the banks are comfortable with IBC and the recovery is also fast. And once the ECL is implemented, within a short span, the cases are to be filed by the banks after the early warning signals of that particular loan account. Once it is filed, definitely the good results will happen both to the financial creditor, operational creditor, and other stakeholders. Because it is a proactive approach. Earlier, once the 90 days, after that notices, after that initiation of SURFACE, after that some time they spend on debt recovery tribunal, all these things are there. By that time, the asset deterioration is happening, delay is happening. So all these things are over a period of time, it is happening. So thereby delay will happen. Delay is also happening. Furthermore, adoption of ECL aligns India's banking practices with international financial. Actually, today, the banks are also going to implement the international best practice in recognition of the bad loans, in providing the provisions to the bad loans, in providing the accurate information from the market about the particular sector loans. As a cross-border investment in distressed asset increases, transparent of the credit risk assessment, reliable financial disclosures will become increasingly important for attracting international capital to the India's insolvency ecosystem. That is very much required. That will happen, and in the coming days, the beneficiaries are both the financial creditors and operational creditors. Once the financial creditors are filed, it is useful to the operational creditors also. And number of cases are to be increased, and the cases disposal is also to be increased while implementing this one. From the border policy perspective, convergence of ECL-based provision, insolvency resolution (IBC) is expected to strengthen the financial discipline among the lenders and the borrowers. Banks will incentivize the main robust credit monitoring system, while corporate borrowers may adopt more prudent financial management practice. Once the banks are identifying the distressed account at the earliest, definitely some proactive approach will be there from the corporate data side also. They will also follow the best financial management practices. In the coming years, combined impact of ECL implementation and evolving insolvency framework lead to faster resolution timelines, improving recovery rates, and greater preservation of the enterprise value. These developments ultimately contribute the stability of the banking sector and enhance the efficiency of the credit allocation in the economy. So once the ECL is good for the country, at the same time, the resolution process will also be simplified and a quick resolution is possible. Hence, the implementation of ECL major shift of the proactive credit management by providing forward-looking insights into the borrower's credit quality. ECL model will enable banks to identify the financial stress early, take timely corrective actions, initiate insolvency without unnecessary delay. Today, that is happening. Lot of delay is there. Once the account turned into bad, on the next moment, on the next day, the banks are not filing. But in the coming days, why it will happen means, once the banks are to be provided 100% lifelong, the provision on life of the loan. Life of the loan means the period of the loan. Suppose one loan is given 2 years means the life of the loan 2 years. And a term loan, big corporates, we are giving 15 years, 20 years also. So the life of the loan is 15 years. Once the second year if the loan default is there, I have to provide for 19 years of provision on second year itself. To avoid that one, the banks are forced to file the cases in under IBC. That is the greatest benefit. Thereby, the particularly haircut problem will not arise, and data availability is also there, and pre-packed insolvency possible, and most of the cases liquidation will not arise, only through CIRP only that will possible. Prospective resolution applicant also, they will acquire the company in a good condition, not in bad condition. All these things will happen once the ECL is implemented. This transformation strengthen the functioning of the corporate insolvency resolution under IBC, improve data availability for insolvency professional, enhance the maximization of a distressed asset, and increase the chances of successful corporate risk. So that's why in the coming days, the financial system revamping is there with regard to the distressed asset. That impact on IBC also. Ultimately, integration of a ECL-based credit monitoring with IBC insolvency resolution framework will contribute more efficient, transparent, and creditors-friendly insolvency ecosystem of in India. In summary, the implementation of ECL definitely 1427 likely to transfer CIRP under code promoting early detection of stress, better data availability, improved decision making, faster resolution of first grade. So that's why there is the changing dynamics, particularly NPAs with regard to ECL and IBC, all are interrelated. In the coming days, the resolution of the IBC cases are easy when compared to that today. Lot of delay is there. After the NPA, they are taking lot of time to file the case with the first they will approach the surface, they will approach the DRT, they will approach one-time settlement, they will approach a compromise, etc., etc. Why? Because the banks, based on the period only, the provisions are to be made. No, under ECL, once the probability of a default that is arrived in the first year, and at the end of the first year, if the probability of default much more than that, they have to file the case. In conclusion, the implementation of ECL framework, April 2027, represent not merely an accounting change, but a structural reform in credit risk management. Today, IBC is also the part that is, they are helping to mitigate the credit risk management of the financial institutions or the operational creditors or the others, particularly the class of creditors like that. When effectively integrated with the particularly insolvency resolution mechanisms under IBC, told that potentials to significantly strengthen the India's distressed asset resolution architecture, supporting the long resilience financial system. That is possible in the coming days. This is in brief what I wish to tell. And here to conclude that one, that today the banks are following income recognition and asset classification norms. That is a reactive approach. Once the account turn into non-performing, then only they will provide the provision. But expected credit loss is a reactive, not the proactive, not reactive. So in the proactive, the time lag to file the case will be minimized. Once the time lag for distressed asset to filing of the case is minimized, then lot of comfort will be there to the adjudicating authority to verifying the information to verifying the data, etc. And at the same time, the CIRP process will be quickened. And some of the cases, they will file under PPIRP also. Liquidation cases in the coming days will be minimized because early detection of sickness of the company, definitely the prospective resolution applicants, they were eager to purchase that one. Liquidation, rare cases only it will happen. So this is in brief about what I wish to tell about the topic, particularly the ECL integration with the IBC. And thank you very much. And thanks to ICSI IIP for giving an opportunity to discuss about on this topic. Thank you.
Thank you very much, sir, for such an interactive and wonderful session. So, can
Okay.
you conclude it?
Any questions, madam? If there is no
Yes,
questions,
shall we conclude?
yes, madam. Complete.
Okay, thank you very much, sir, for such a nice session. The session was very wonderful.
Okay. Thank you.
Thank you, sir.